Good evening, this is Ken Long at Tortoise Capital with a review of the daily trading report for September 20th, 2016. Markets pull normal in the middle of the annual and 10-day trading ranges. Volatility with risk Z still in the warning zone here. Too early to start doing swing trading. This is the kind of market you want to be ready for intraday moves primarily. So I won't be taking the channeling signal in Latin America, but I would be willing to look at it on an intraday basis. And then if successful with markets money, I would consider holding that overnight. A number of channeling and overreactions available for one-day pops in the large caps, and a number of auto framers also available. ADX starting to decline. Bulls are beginning to gain a little bit. So we haven't seen the kind of sell-off that is implied in this volatility move here. So we'll keep our eyes open for that kind of a move. Most everything on an auto framer at better than 2 to 1. Lots of dojis today. In the ETF 30, also plenty of auto framers available. A handful of channeling and one overreaction in energy. These are the auto framer key price levels for your reference. In the regression line fractal framework, these are the symbols on the top shelf in the green that are the most above their own, most below their own RL270 as measured by their own ATR. So McDonald's is almost 8 ATRs below its long-term fair value. In the bottom shelf, in the red, these are the ones that are overheated, the ones that are the most ATRs above their own RL270. So Apple, almost 7 ATRs above. The squeeze patterns are ones that are in a position for large one-day pops relative to the size of today's trading range. And that's the reward to risk ratio that's available. So I'll be looking at Brazil, Latin America, Amazon and Disney, Costco, Monsanto. Failure to fail further these last 5 days, but have not yet returned to the previous price levels up around 218. So this is getting to be a critical state here. If I get failure below this low of the day, I'll be certainly short. That's my orientation right now. Declining slope of the 30, which points the way downward. If this price level fails right here, then we're open for that kind of sharp, another 3 or 4% sharp drop. All right, let's take a look at a couple charts from today's intraday trade. Here's one that is an RLXD pattern 4. So a move, a breakout from the sideways quiet channel here, past Z3, pull back just to the edge of the Bollinger Band mean, 1, 2, 3 entry, nicely done by Sonal. Entry here, stop here, tests Z3 a couple times, exits here in the RLXD, coming back through the dragon. Nicely done. Here's one from Yasik in Devon Energy. There's an owl pattern right about here, but he was working on some other things. However, this is still good enough entry. You can see he exits as the RL10 crosses back over the baby dragon and locks in 1R. Also Devon Energy, here's an entry, gets the RLXD exit for a fractional loss, minus 2.8R, stops and reverses on the owl, and rides this for 0.75 hours, so netting about 0.5. All done. Here's one from me on 5-minute charts on IWM. Excuse me. Let's get this. All right, so this is the open. We get an owl pattern here. RLXD, the baby dragon crosses back below the dragon. I'm short here with the stop at the swing high of the RL10. So we're short at .20 with a 45-cent initial risk. The collapse. And then if this is where you would expect it to resume, but it fails, so I take a second one at the first price target, which was the Bollinger Band mean, the RL270, and then Z-1. It actually comes down and almost tests C-1. The fact that it doesn't get here gives me a 1, 2, 3. So this is 2 scoops short, cashing on a 1, 2, 3, and RL10 crossing the baby dragon. Then we have an owl pattern, so I'm long here with a stop down here at Z2. And that one we cashed for a win later in the day as well. So the 5-minute charts are cleaning this up in here. It's not getting chopped as much, fewer trades, but still available for the long-term larger moves of the day. I like this waiting that extra 15 or 20 minutes and then seeing a high or a low, especially after a gap up, and then playing the fade, and then looking to add where I can, where it makes sense based on price structure. So that's everything from today. Basically same posture as tomorrow. We're in this very short-term direction, this market, looking for resolution to the political situation, and looking for some Fed volatility tomorrow as well. So keep your risk measured and your powder dry.